Hi traders, welcome to Real-Time Daily Trading. There's our daily webinar. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, but for the daily, so let's have a nice start to the trading day of today. It's Friday, 2nd March 2018. Welcome. This is Berlin office speaking from Admiral Markets. My name is Jens. Thanks to joining us. We will start with a risk disclaimer like always. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you are a starter, please start with a demo account. Make yourself familiar with leverage trading, long trading, short trading, and your personal risk management. If you'd like to see the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and everything is to find there. This is me. My name is Jens. My English is made in Germany. I'm talking from the Berlin office, but hopefully my quality is made in Germany too. But I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Mike's day. On Thursday, it's Ninet's day. And on Friday, like today, it's Dirk's day, our leading day traders live. And of course, if you like to trade Forex and CFDs, you will get many benefits only with Admiral Markets. Check them out on admiralmarkets.com with all details. For example, great safeguards, negative balance protection policy, or one of our bestseller, DAX 30 with typical spread of just 0.8 points to the main trading hours, mini lot trading, MT4 and MT5, and many, many more. Like I said, admiralmarkets.com will give you all your answers. Yes, there you'll find also something about our regulatory background, and of course, how to contact us, how to send us an email, and all the other channels here, like YouTube. Everything is linked from admiralmarkets.com. Before I give the word to Dirk, I will show you something more. We will get a new great or big news event on the coming weekend, the Italian Parliament votings. So if you like to check it out, it's to find on our webpage on admiralmarkets.com. We will change our trading terms around this market event. Please be aware of it and check it out on the Admiral Markets webpage. And also news since yesterday, since 1st of March, it's available. We updated our MT4 and MT5 Supreme package. You get a new indicator into MT4 and MT5 if you download Supreme again and install it to your demo or real account. You get a new indicator like displayed here in this image, which show you your open position much more prominent like before. Check it out, and if you have questions about that, just ask it here in the webinar or your personal contact via our service desk. Thanks. And now it's time for Dirk, our day trader. Hi, Dirk. What is your view to the markets?
Yeah, good morning, Jens. Good morning, crowd. Let's have a start. Friday session, 11 CT here. So we'll have a look at the German DAX. This one is really crashing sub 12K. As you can see, you got a level of 11,950. And if you look at the current screen, you see a buy limit. Still, there's a buy limit. And this morning we tried to figure out where to place the buy limit, for example, to just fetching or catching a little bit of a rebound move up. This one right now looks a little bit far away, but you never know. In a couple of minutes, or sometimes even a couple of seconds to minutes, the DAX maybe fall like a knife and maybe shoot through that kind of buy limit. And if we are pretty lucky, the stop loss may hold. So I'm not sure if I leave that one in the market the next hour to come. Looks like we are diving to old lows like 11,850s, 11,860s. We will figure out where we find that one later on. First of all, if you're about to open positions, for example, like you see with the order ladder, just feel free to use it. As you can see, moving the buy limit, for example, to that kind of direction where you want to start is quite easy. And if you, for example, just do that same stuff again, just to show you the stuff how it works, just move the buy limit. Then, of course, if you drag it to the upside. For example, where you will be thinking about having a take profit scenario. So that one we used in the old scenario was around the 12K, 1240s. So let's just press the button here right now. So you see it's really a nice move up. It could be a nice move up. And of course, going the way upwards, you always have to think about a stop loss level as well. You will be heading downwards, for example, seeing the risk. It's even printed in euros here and percentages, like you see that one to the left side, euro 255, for example, right now. And if you think about a little bit less of a stop loss scenario, you might be moving it more up the road just to be maybe risking something like 100 euros, around the 100 euros, for example. Just let us just press the button, for example, right here. So this kind of buy limit right now is on top of the old one is now set. It's quite easy to use it. And for example, if you're not sure and if you're not willing to keep this kind of a setup the next minutes or hours to come, it's quite easy. For example, just do the old school, to press the right mouse button and just, for example, delete the order as well. And that way the one order is again deleted. So I leave the one from this morning in the terminal. So let's see what's going on. Jens already spoke about the weekend. The Italian elections are coming up at Sunday. That's the 4th of March. But on top of that, don't forget, we don't have this kind of, we don't only have this one. There's another event coming up from the German perspective, for example, from the German politics, just because the Social Democrats are still electing and still voting if they are taking part at the Grand Coalition or not. And there will be a surprise outcome at Sunday. So maybe they will or not. If not, Monday will be starting roughly, I guess, because that possibly means that we will have new elections in Germany. Because I can't really see something like a minority government with Merkel. That makes no sense. So this is another point to come up on Monday morning with the markets opening. So be aware that it could be a roller coaster ride. So it could be, doesn't have to be. So for example, the technicals, looking at the daily chart, you will have a view at the last low. The last low from this perspective here is from 6th of February, and it's around 11,692. If you look at, for example, the Xetra DAX, you will be having that scenario at 12K 03.36 points to be 100% correct. So if you, for example, take Fibonacci retracements, you're going to put the 100 Fibonacci here, and the last high you will find around this 12,611. My voice is not very 100% clear. Please excuse me. I try my very best not to make any noises. Just to the downside as well, check where the market might be heading to, just from the projections. The Fibonacci projections give you a hint where the market could be heading to. And this is, for example, the 138.2 and, for example, the 161.8 level. Those two levels are around 11,350, 11,130. So these are not some kind of ridiculous levels where someone may be thinking, oh no, never, the DAX won't be heading down there in the next days or next weeks to come. Don't be sure. You find a lot of convincing data, for example, from the Eurex. And if you like to, you may take a look at the Eurex website, eurexchange.com, and will find a lot of information about options, for example, expiring at the 16th of March. This is the so-called witching day. You will be observing that one, and you will be finding a lot of open interest between the levels of 11, 11.5, 11.7. So there is a lot of open interest around these levels. So it could be very interesting just to let you convince that these levels will be maybe possibly nearly touched or moved into that direction. So that is one case. So we will be leaving this setup here, and we'll be heading to another one this morning. I'm not sure if this one is running well. This morning we started this Euro cut. It's a euro card short, and I entered that one 45 pips down the road. So this one is in direction to be getting stopped out at the level of 158.25. So that's my stop loss. That's the first try. It's the first try of this setup. If you look at the, for example, longer term chart, you will be having a weekly chart and we'll be seeing old high, the old high here at the 161 level, for example. So it might be, of course, questionable. Why do we go short here? We are just having this short view from the 4-hour chart and from the last high and the last lows, and having another Fibonacci retracement. That's the 161.8. This one is around 157.13. So the thesis, the pure thesis was something around having a reaction down to this 161.8 level again and diving sub that one, heading to the direction of 138.2. So that might be around the 155ers, 80s, around this one. This was a scenario. If this one is not going to be, not to work out, well, that's why we have the stop loss for. That's the stop loss at 158.25. So if that one is not working, we will be waiting for the next chance to come in that pair, and it might be in direction to 161 levels or close, very close to that one. You see that blue trading box, that's another short zone, that's another short possibility. Okay. Yeah, this morning there were a couple of questions. For example, at the US dollar versus the Japanese yen as well. And one thing for sure, every kind of little move up the road is something like an invitation to be short again. If that market and that stock markets are like that, like the last days, we will be seeing US dollar yen going more south, just because the yen is so-called a financing currency. And if you see movements later on from repatriations are going to move the yen stronger, because the money is flowing back to Japan, to the yen. And that's the reason why, for example, the yen always is a currency being stronger when markets are in turmoil. Okay, so let's have a look at the daily one. And seeing a lot of fib lines here as well. So, for example, the one level we are always observing is the 61.8 level, and another one is the 50% level. And those two levels are some kind of they are the next moves to come. If the US dollar versus the yen is moving back, something like a relief move is moving back into the territory between the 1.7 and 1.8 level, it might be like a little invitation to go short again. Good. For example, let's have a short look at a few pairs and a few a little bit of stuff we talked about the last week. Not the last week, the week before, because last week I was sick. So we spoke about the US dollar index. This one is really moving like almost moving like the prediction. So we had those moves up to the 90-50 level, and now diving sub that again. And so the move right now, if we have a look at the current policies from Washington, might be going down to the 89ers again. Why am I talking about stuff like that? Look at the current policies, look at the current outcome from yesterday's meeting with a lot of CEOs from the steel sector. We got a so-called, I quote, for example, I quote Global Markets Research from ING right now. I quote them because they used a nice expression. They called Trump a mercantilist. So however you may call that, it's protectionism, and protectionism always is very, very, some kind of a disadvantage for a country later on, and that might be, being something like a boomerang. So, if you look at the euro-US dollar, for example, for the most important currency pair, you already saw that. It's like a whip. The euro-US dollar rate from the 121.70s, 121.60s level came back up the road. This level was exactly the level we spoke 2 weeks ago. I color this so-called rectangle, this so-called shape here as a so-called trading box where you could go long again. I spoke about the short move, and I spoke about the so-called descending trend line up to this moving average. I spoke about that 121.70/60s level, just because we had this low here as well. Look back at the industry. So for example, look back at January 2018, where you got the low of 121.65. So this was exactly around that kind of a low where the market turned up and turned back again. So what is going to be happening right now is that we have a little bit of a relief upwards. And if we try to find a new shorting point, for example, we will be having that one between the two resistance lines today, between the 123 level and the 123.30s. So this might be a next wave down, and the next wave down, if it really works out, to be. And this is to see it, you got to see that one in combination with fundamentals, and in combination with, for example, the outcome of that weekend's elections and German policy stuff, for example. And if you see that in combination, that might be heading into the other high. Let's have a shape as well here, a rectangle, and color that one, and use that old blue one here, and just print it at the same level. Why do I do it? Just because of this old high. That's the 120.90s, approximately 120.90s high, and we got that one. If you're going back in the weekly chart, we got that one at the old high level. Let's have a look. Let's have a look from what is the level? 120.92. 120.92. So that is the next level for a next wave to for a better setup for a longer term rebound for the euro after we are tanking to 120.90. So that might be a next move. In the long run, it still looks like, and don't be shocked when I tell you stuff like that. In the long run, it still looks like we might be heading to old highs from the euro-US dollar. And if you have, for example, if you have something like horizontal lines here, you see levels. For example, one around here, 128.70s. And the next really huge level would be the one from the 261.8 level, which is at 129.60s. And of course, don't forget round numbers like 130, of course. If you have read a lot of stuff about so-called fair value, this is something when economies are maybe quite comparable and people are going back to the libraries and calculating, doing research and stuff like that. And then later on, there is something like a fair value. And the fair value is something between 131, 132. That's what they're always talked about.
There's one question about NFP, non-farm payrolls. Is it today? One participant asking. There doesn't seem to be much comment about that. I checked in calendar. The non-farm payrolls is not today. It will be next week. Yep. Just for double checking now here with Dirk.
Yeah, that's correct. The non-farm payrolls is next week, and will be like always 14:30 CET. And besides that, because we are talking about euro-US dollar, especially here, we will be having a major event next week at Thursday. That's the ECB rate decision. The ECB rate decision at 13:45 CET won't be something like a big event, but most important is the press conference at 14:30 CET at Thursday, because they will be talking, or they might be talking about the next setup to come. and about the so-called monetary policy projections. And this is something might be convincing the market where the next bigger move for Euro-US dollar is to come. Okay, so from the short-term perspectives, for example, two days moves, if the Euro-US dollar is moving up to that 123.30s, feel free to be invited for a next short ride. But always think about your risk and money management and about your position size, and don't get fooled and don't get trapped. Don't give that one too much room, and don't go over 124 levels, right? For example, like this 161.8 level here. A lot of people are playing the markets with 150 to 250 pip stops. You might be scratching your heads and ask yourself, what the hell is going on with this guy? But if you're talking about swings, that might be useful. If you're talking about intraday trading between 10, 25 pips stop losses, of course, no questions, that is ridiculous. Never use big stops like that. It always matters what kind of a time frame you're trading. Okay. Another market important for today, because this one is rocking up and might be rocking up more. I still left the old chart. It's the EURUSD. Mrs. May is talking about her future visions and the British future visions about the Brexit and how it's going to be arranged, and what the British are going to accept, and in contradiction what they are not going to accept. Whatever the outcome of the talk is, it might be having a so-called conclusion that the market is not convinced, won't be convinced as far as they have any solution and anything prepared. And as far as they have nothing prepared, the market will, sell the pound. And as long as that happens, you might be invited to short the pound, for example. That means going up to this 50% level we see here in the chart is quite close to the 0.90 level. And the next important one to the upside, for example, is the 61.8 level. Quite close. 0.9070s. So this doesn't mean that it is going to be happening today or the next day. But one thing for sure, if the market is going up to this one, it might be useful to wait a little bit, to have a little bit more patience, and or to be prepared with pending orders, using stuff like that, like the 0.8990 levels or the 0.9070 levels for preparing pending orders to be short in the next way to come. Of course, if you're absolutely convinced that there will be a lot of rubbish outcome today from today's talk, you might be long right now and be having something like a stop loss level be really close to that 23.6 to the pivot point right here, or 80s, if you like to play that one from the long side right now. Okay, Jens, some questions, special market?
No, I will go back to my screen because there was some questions about this new indicator. So now you see it live on MT4 or MT5. This is a new indicator. If you like to use Supreme, it's available for free for demo and real accounts. And the new indicator is just about the prominent open position. So if you have no open position in DAX, like I don't have right now in this demo account, the circle is gray. And I just make a demo trade to demonstrate it. If you have now an open position, you see as prominent as possible. If you are in the profit zone or in the loss zone, of course you have to just make the spread, and then it was in the first 2 seconds in the loss zone, and now we are in the profit zone and the circle is green, much more prominent, like this small number just here in this table. And of course a panic button if anything happens, just push here on close all area, and then everything what you have opened in this instrument is closed. Really nice. You can move the circle wherever you like to have it. If you like it much more prominent like I have it now, you can make this circle even bigger, 2 times bigger, 3 times bigger, like you want. And if you say it's too prominent, you can make it 30% smaller. Everything is doable, manageable in the settings. Just do it like you want. It's really great. The easiest things are the best. It's quite easy, but like I said, not available anywhere else at any other MT4 or MT5 broker, only with Admiral Markets. So try it out if you like, and then you get it, and try it in demo or real account, whatever you want. Thanks for now. Have a great weekend. Next Real-Time Daily webinar on Monday. Safe trading, and don't forget the big market events, the Italian Parliament votes and polls. So check out about holding position over weekend. Maybe not, or maybe yes. It's your decision. Thanks from Berlin office. Bye bye.